Okay, guys. So welcome to the 6th day of this YouTube mentorship. And for this segment of the training, I think maybe from now to the next 2-3 days, I guess, because it's a very lengthy topic. We are going to be talking about liquidity, right? So this is going to be the introductory aspect, right? We're going to be introducing ourselves to liquidity because this is one of the most important topics I feel that you should know, right? So this is introduction of liquidity. All right. So now, first of all, let us understand what liquidity is, right? What is liquidity? When we say liquidity, you have heard so many popular statements like liquidity is the name of the game. Your stop loss is my entry. If you can't see the liquidity, you are the liquidity. All those popular quotes, right? If you remember anyone, do what type it in the comment section, right? What quotes have you heard about liquidity apart from the ones I've mentioned, right? Just type it in the comment section because I'm using that to know that those that are active. Because since we started our mentorship, some people think that they can bypass the system. They just gonna drop any random comment. The way I know that you watch the video is by engaging with what you were asked to engage. For instance, now I've told you guys to type one quote you have heard about liquidity. Someone else that did not watch the video, the person wouldn't know what was said. You just want to type random thing on the comment section, right? So this comment, I use it to know those are active on the videos and those are actually watching them, because someone is asking you to, come and learn for free. I don't know what's the video there. Come and learn for free. You're not asking to pay a dime. Just come and learn for free. And then help the channel grow by reposting. When you comment, when you like, right, it helps my video to get more reach. So I'm asking you to just help me grow the channel, and in exchange you get free teachings. That is it. You're not paying anything. Just few seconds, you comment, you like, and you share. That is all. That is all. That is basically all. All right. So now, what is liquidity? Right. In the simplest definition, I will call liquidity as stops, right? Or let's say an inducement. Right. I would say I define liquidity, an inducement to take a trade before. All right. Okay, so say an inducement to take a wrong trade. All right, that's why I said it's just like liquidity is like a trap. For instance, now um maybe there's something that I like so much, right, and maybe they want to put me into trouble, what would they do? They're going to use that thing I like so much to put me into trouble. They're going to induce me, right, into falling into that trap with that thing I like. For instance, now maybe I like beans and plantain, right? And then maybe someone wants to, maybe get me to buy him something, or getting me to do something for him. The person, maybe I come home very hungry, and the person brings out that beans and plantain and say, okay, I have beans and plantain. You want to eat? I said yes. Okay, say okay, you help me and buy me this watch before you take my plantain. And say, me, I'm hungry. I beg, okay, I'll bite, I'll bite, I'll bite. So do you understand what I'm saying? It's like a something, bringing in something that makes you to make a decision that you are not supposed to make, right? That's what liquidity is. It's just like an inducement to take a wrong trade, right? That's what it is, just an inducement. It makes you to want to take the trade, right? For instance, now, the retail world, we are all retail traders, but once you should understand that we have two kinds of retail traders. We have the retail logic and retail trading platforms. So when it comes to this, when it comes to trading, we are retailers. We are all retail traders because we don't have enough money to move price. We all use MT5, MT4, C Trader. We use all those retail platforms, right? But what distinguishes us is our logic, right? How we internalize the price movements, right? Some people see price from a pattern standpoint. Okay, it's a double top. Okay, it's a double bottom. Okay, it's a wedge. This and that, all those patterns. Those are what we call retail logic, right? The retail logic is a logic that just focuses on pattern for pattern's sake, right? So the retail traders, retail logic traders. So when I mean retail traders, I'm referring to those that are using the logic. We are all retail traders, but our mindset or approach to trading the financial markets are quite different. All right. So a retail trader, from my perspective, is someone that uses retail logic, right? Not that I am not a retail trader, but the person uses logic that are just based on pattern for pattern's sake, right? So that is it. So that's how you know a retail trader. They just trade pattern for pattern's sake. No reason behind it, right? Why a smart money-minded trader takes into cognizance liquidity. He tries to understand the market from the market standpoint, right? Not from his pattern standpoint, but why is the market doing this? You want to understand the market from the market perspective, all right? Or from the smart money-minded perspective, right? So that is basically what it is. So this inducement trip retail traders into taking trades or taking wrong trades. For instance, now you see that the market is very bullish, right? This market is just spiking higher, and then next thing you see that maybe price rejected from here, right? And the next thing that comes to mind is what is to, because of this rejection now. In your mind, you're feeling that the market is supposed to turn because it has created a double what top. So what happens? You go and do what? You sell there, and market weeks you out, and then finally what drops, right? So now you're wondering, okay, this market was supposed to drop. Why did it have to push above my double top before dropping down? Haven't you asked those kind of questions? So now this is what we call liquidity, right? This double top was created to induce you to take that loss. So this inducement, these traps that are being set by the algorithm that runs the market, right? An algorithm simply means a computer program, right? The financial markets are run by computer programs. That's why the candles are always moving. It's not someone that's pressing it. There's a program, just like your smartphone. Your smartphone is always running, the time is always clicking, everything is always running. So there's an algorithm that runs your phone, right? We call it the phone software. So the financial market have a software that that run them, right? Just like almost everything, even some cars now have softwares that run them, right? If you put reverse, it knows you should do this. You put your map, all those things. Our world is run by software, right? I mean, we're recording this video with a software. So most of these softwares have what we call algorithms, right? An algorithm is a kind of plan by step-by-step instruction, right? Given to the computer to do this, do that. So most of these markets are run by algorithms, right? So this algorithm creates this kind of scenarios, right? Based on what the orders that were placed in it, right? The market moves based on orders. Like, I'm not talking about one lot. I'm not talking about 10 lots. I'm talking about millions of dollars. Those kind of big positions, not one lot or two lots. No, not even 5 lots. I'm talking about 1,000 lots, 5,000 lots. Those kind of big positions that you cannot even imagine, right? So now you have your pattern here. Price does what? Runs above that high, and then what? Reverses. So this is what we refer to as what? A double what? Top, right? We call this a double top, right? It's that simple. No, nothing again, right? So this one called liquidity. You see this happen, and what I was reverses and on you, right? So now, what about those that are always taking trend line trades? So now you see market form something like this, right? See market form something like this, right? Some kind of trend line, and then what happens? You'll be like, okay, first touch. No, there are pattern traders. I'm sure that once it's a third touch, it will hold, right? They'll be like, okay, first touch, second touch, and then they want to take on the third touch because that's how trend line traders trade. They always want to take a trade on the third touch. So what happens in the third touch? Market does something like this, takes them out, and then what? Continue upwards. So imagine maybe you took this buy on this third touch. Maybe you are thinking that maybe the market is going to hold from that trend line. Maybe you bought there, maybe you're trying to anticipate the market to go long. What happens now? The market, takes you out. Maybe put your stop loss, maybe stop loss is maybe somewhere around there. Oh my God, this is the same misbehaving. All right, so maybe stop loss is below this low here. What happens? Market takes you out and then what? Reverses and then continues bullish, right? Sometimes they'll try to break out retest. Okay, they'll try to draw that trend line now. Okay, the market has broken trend line. Let me, you remember break out retest. So they want to take that sell here, and then what happens? As it just goes short, immediately they go short at this point here. The market does what? it blasts and continues bullish. So now those people that bought at the trend line now have taken a loss, and those that are trying to short at the retest here have all taken a loss. If you have experienced this, just type it in the comment section too. Type, I have experienced a break and retest liquidity trap, right? Just type it if you have experienced this situation I'm talking about, because me, I have experienced it. When I used to trade retail patterns, I think in 2020 or 2021, I got a hit with this a lot. Market, I was trying to buy a trend line to take me out, and then I'm trying to sell it again to also take me out. So I'm taking the first loss on the buy and then second loss on the sell. So this is why we don't really focus on retail logic, right? Now, I want to just make a disclaimer here. Retail logic works, right? Sometimes. So don't get me wrong. I'm not saying this don't work, right? They work sometimes, right? That is why you can see people making courses on it, right? Notice, I'm not saying it doesn't work. I'm saying it works sometimes. But when you begin to check your trades, you notice that you would incur more losses than gains, because for something to work maybe 3 out of 10 times, it doesn't make any sense, or maybe 2 out of 10 times, or maybe 10 out of 100 times, it doesn't work. It doesn't make any sense, right? So when you continue trading this way, right, you're bound to make a lot of losses. And the purpose of learning the smart money approach of trading is to reduce your losses and maximize your gains, right? When you begin to understand these things I'm teaching you, you begin to see the errors you're making, right? You can now reduce your losses. So the first step to profitability is, number one, reducing your losses. When you can now reduce the number of losses you take, how often you take losses, and then you can now maximize your wins. That is how profitability works. You can reduce, maybe if you take maybe 10 losses in a week, maybe not taking maybe 5 losses this time around. You have now reduced your losses from 10 to 5. And then if you used to take let's say 2 wins in a week, you now need to make maybe 5 wins in a week. So you have reduced your losses and then making more wins. And if you use good add on that, you see that you're becoming more profitable. So maximize your wins, reduce your losses. That is just the secret of being profitable as a trader. Reducing your loss and making more of your wins, right? So that is it. So now we have understood everything about the logic behind this. So now let us understand the kinds of liquidity, right? The types of liquidity will take us a lot of time, but we are going to just focus on a few for today's teaching. And let's talk about those few of them, and you can already see them on the chart. So in today's teaching, I'll just be introducing what we call the static. I will give you guys an example of that. I have a static liquidity, and then there was dynamic liquidity, right? We have static and dynamic. So as the name implies, static liquidity is just the example I gave you at the right. A static liquidity is referred to a kind of liquidity that forms when price forms things like double tops, right? Double bottom, right? This is a double bottom. These are all static. Wedges, something, I don't know how wedge is drawn. I think something like this. Those patterns, something like this. It's okay. It's a folded wedge, it's a rising wedge. I don't know. Those patterns, right? You should know them. So they'll kind of draw something like this. Okay, this is a wedge. They'll kind of draw a wedge and say, okay, if it hits this flag, I don't really know how to do all those things. All those cup and handle pattern, all those things, they're all static liquidity, because they're not fixed, right? They have a particular pattern, right? We have the flag pattern. So we have flags, bullish flag, bearish flag. Those are all static liquidity, because they are patterns. So static liquidity refers to patterns that have a fixed fixed area of interest, right? So refer to that as what? Static liquidity, because it's not moving, all right? So that is it. Therefore, dynamic, we're referring to trend lines, right? So dynamic is typically trend lines, right? And trend lines are just what we call dynamic, because if you have a trend line now, dynamic because it's moving, right? So you can say the first one was there. So obviously the trend line has to be somewhere around there. So it's not really at a fixed point, right? So price can do something like this. Price can choose to come back immediately and tap it, or you can choose to push higher and then push higher, and then eventually was come to this point here. So you can see that anywhere on the trend line can act as liquidity. So price can choose to come there immediately or can choose to delay. That's why I call it dynamic, because it is not really fixed at a specific point. But double top and double bottom are very fixed, right? It's just fixed here. No matter how long price takes, this is the liquidity right there, right? It's fixed, it's static, right? That is what I think that this wedge is also dynamic too. I think also dynamic too, right? So just understand the whole point, right? So these are the two kinds of liquidity we have based on movement, right? These are the two kinds of them. So let's just quickly let me quickly bring out a chart so I can use this for my examples instead of stressing myself, right? So let us quickly look at an example here so you guys can understand what I'm talking about, right? All right. So let's what watch list is this? All right, let's use Euro USD because USD will give us. So let's let's use GPUSD. All right, so let's watch this so you can see what I'm talking about. So you can see, can you identify it here? So you can see, can you see what we call static? So can you see this resistance, this support level here? Can you see what happened there? What happened? Market was pierced through it and then what? Reversed was bullish, right? That's why we always tell you guys to be very careful with this kind of things, right? Now imagine maybe you want to sell here. Watch this. You say, okay, this was the double top now. Can you see this? Maybe you want to sell at this double top now. Can you see what happened? Price kind of gave a kind of red candle, and what happened next? Reversed and then dropped down. Right? Can you see how this is a coin? Right, look at this one here. Maybe you want to buy this, maybe support level. Okay, this is support level for you now. You say, okay, I can see this double bottom is forming. It's ripe. It's ripe. I'm ready to go in. I'm ready to go in. And then you put your, I don't know, maybe something like this. Okay, you try, maybe it'll be like, okay, it held here. It held here. This is a very good level, right? And then what happens? You try to buy the weapon. Market sweeps you out, and then what? Reverses to the upside, right? Why you can see the dynamic one here, that you can see how, can you see a trend line there? Someone will be like, okay, this is actually a trend line. Okay, the best will be like, okay, first touch, second touch, and then what happened? The market touched them the third time, right? It touched their stop loss, right? So you can see, right? Now, this is why I said this thing works sometimes, right? Can you see where the thing worked? Look at it, look at where a double bottom worked. Can you see this? So this is why I said it works sometimes, right? But if you check your wins and your losses, notice that your losses will actually outweigh your wins, right? So watch another one here. Can you see a resistance level forming here? What happened? So it supports, market liquidated it, and what happened? Ran up. Same thing here. It's always on repeat. It happens a lot, right? Imagine when you buy here, you can see how the market. Can you see how the market was inducing people, right? Can you see this first touch? It pushed up like it went like 247. It was like 25 pips or thereabouts. And then what happened? It went down. It pushed again for the second time. What happened? You can see how it gave up the ghost and then what reversed. Now imagine you try to, maybe you say, okay, let me sell from this point here. Can you see how price was playing around this? It's even tapped here and then dropped. And what happened? So if you are buying and selling, whatever you are doing, you'd have gotten guts, you'd have gotten caught up. Right? Look at trendline liquidity form here. Can you see that dynamic liquidity? Can you see how price was playing there? Look at this red candle that printed there, right? From this trend line area. 1, 2, this is a third touch. What happened? So I can go on and on and on and on, right? This is what we refer to as what? Static and dynamic liquidity, all right? So let's talk about internal and external. This is where I'll be wrapping up the teaching. So another kind of liquidity, we have what we call the internal and the external, right? Remember I told you guys about ranges, right? I told you guys about ranges, right? I taught you guys about range, right? In the previous teachings, I think on day 2, I talked about the ranges, right? So now we have two kinds of liquidity again, based on the range. We have internal and external. So internal is very, very simple. Okay, external is very simple. When you say market is bullish, higher high, higher low. So external simply means the the extreme regions of the market. So this is external liquidity from here. That's external, and then this is what external. So it's actually at the range high and the range low, right? This is your internal, and then also your external, right? Very easy. Once you see a bullish range, you mark your internal and external. Once you see a bearish range, you mark your internal and external, right? So you mark your internal and external. This is what we call external, right there, and then right there. Right, this is what we call internal and external liquidity, right? So that's for external. Now let us talk more about internal now, because we have understood external. Let's talk about internal a bit, right? So let's talk about internal a bit. Now, for internal range liquidity, internal range liquidity is formed when the market create a structure within a structure. For instance, the market is bullish. The market does something like this, and then so now the external liquidity is from where? It's from this low, right, to what? That high. Right? This is external liquidity because it's always at the extreme, the last low and the last high. That's your external, right? Now, internal forms inside the external. Do you understand that? So now we now have what? Internal range liquidity. So this low is what? Internal, because this low formed inside what? The overall external liquidity, right? This is also internal because some might be seen as what? If, I don't know. For this can be maybe kind of I don't know what they will call it, but this high was formed inside this range. So we call this what? Internal range liquidity. So it's just very simple. It's the high and low that is formed inside an overall higher time frame trading range. All right, that's what internal and external liquidity refers to. And most often, price always goes from internal to external liquidity. That's what I mean. Market is likely going to do what? Go from external to internal and then to external. So market would always want to take out what? Internal liquidity and then what? Go for the external. So the market is bullish, it will first of all take out what? Internal liquidity and then run for the external. So always expect internal liquidity to be tagged. Always expect this kind of liquidity to be tagged. Right? Liquidity that was formed inside. And then another example is where you have something like this. Right. Now, in this kind of example, now we have maybe an order block. This low here did not mitigate the other block here. I mean, we have an order block here or something here. And price did not tap it before going up, right? If price tapped it, we would have called this a mitigated zone. But now in this example, now price did not tap it. It left this POI, maybe an imbalance or an order block, it left it untouched. So we can now see, okay, this is what an internal liquidity, because this is what a trap to make it to buy before what this original order block. So this is another way to see internal liquidity. So market can come back, tap the other block, and then what? Rally higher, right? So this is what we refer to liquidity. So it either looks like this or it looks like this. So it's either it forms in between or it forms a low that does not tap properly into a POI, right? It doesn't, touch the POI properly, just runs away. And then price comes back later on to, tap into the original POI before, going what your direction, right? So let's quickly look at a trade I caused yesterday. I think it was I don't know if it was E or G. I think it was EU or is it G? I caught a trade with this idea yesterday. Right, I think it was a 5 minutes time frame. You can check my social media account. I actually called this trade. It was very beautiful. That was yesterday. It's very easy trade. Let me see. Yesterday was what's today? All right. So so let us look at yesterday's price action. I don't know if it was yesterday or whether it was day before yesterday. Let me quickly just check. I think it was yesterday. So yesterday I can't really remember the exact pay. It was EU or it was G. Was it EU? Let me check. All right. I think it was EU. I'm trying to see something to show that is what I'm talking about. All right. Okay. All right. Okay. See something. All right. No. I think it was on G, not EU. I was trying to get the exact points. All right. Okay. I've seen it. All right. So this is it. So I think this was a trade idea. I had this other block which was not tapped into properly. Right. I had this other block. I think, sorry, this was other block. This is so these last two candles was my other block. I was looking at these two candles was my other block. And then I noticed that we had what? A bullish range. What do I mean? This high was above this previous high. So we had our external range liquidity from here. Right? You can check my Telegram community. I caught this trade and I posted it on my my Twitter account. You can see external range liquidity from here. This and this. Then what happened? I saw that this other block was not happening to. Then what did I see? I saw what internal liquidity. So got this internal liquidity here. Right? You can see this internal liquidity here. You can see all these things forming inside it. So I saw all these things. I was like, okay, market, this is internal liquidity. So I was like, okay, market is likely going to take it down and then what come for this was other block. So my entry was at this other block here, right? This other block here, these last two put down candles. I simply got involved here, and then I took my profit above this high. But this was the original TP here. So you can check my Telegram page. You can see where I caught the trade. Even on my Twitter, I posted it yesterday, the 5th of June, right? This 5th of June. So you can, if you think I'm lying or you don't believe what I'm saying, just check my Telegram community. I posted this screenshot or Twitter. I posted it to show you that I actually caught this trade, right? This was the idea. We had internal liquidity here, and I told you that markets likely would go for what? If you take out what internal before doing what going back for external. So what did I see? I saw price was create internal liquidity and then it hits my other block, which was at close to the external. I bought here. I always remember that whenever you're using this concept, when you're buying with this concept, your stop loss has to be what below what the external. So I expected the external should not get taken out. So I simply bought the target was overall target was there, but I took my profit at this old high. I didn't want to risk it. But this was being overall target just above here. So you can see how these things are very nice, right? So if you understand internal and external liquidity, you're going to really your trading performance will really come up. Right? I tell you the truth, it's going to really improve. Right. So this is basically where I'm going to be ending this call for today. Right. So tomorrow we're going to talk more about internal and external liquidity, and then we'll not be talking about fair value gaps, how fair value gaps act as internal range liquidity and all this fun stuff. Right. So tomorrow, don't miss out. We're going to talk more about internal and external range liquidity. Right. I don't want this call to be so long. It's almost 30 minutes. All right. It's almost 30 minutes. So I think I'm wrapping up here. So I would love to see you guys in tomorrow's teaching. Please do want to invite a friend because we are about to take it to another level, right? So see you guys tomorrow. Have a wonderful day. Please like this video, drop a comment, and then subscribe. And also follow me on my social media accounts, right? So see you guys in tomorrow's teaching. Cheers and God bless.